We are live. I believe it is episode 5. Rob's coming to frame for those who are watching. Welcome back to Roast with Rob, hosted by Craig. I am the host, of course, Craig McGrother, alongside
Rob Beardsley.
Very good. And we are still in Dallas. What did you do today? Because it's kind of exciting, a little bit more than we did before, but do you want to maybe break down what was going on?
Yeah. With the video team, we cranked out bunch more content. Shout out to Weston and his team, Chris and Jake. So making some good content. At this point, I've been making content for years, filming videos, talking about bridge loans and return on cost and preferred returns and
really fun
debt,
stuff. Yeah.
Unlevered IRRs, et cetera, et cetera. And it did build credibility, absolutely, and it got people excited and established relationships and got our name out there. But it doesn't really resonate as much as making people feel something. And that's unfortunately the way the world works, is you have to make people feel something. You have to tell stories, teach through stories, make people feel emotion. And so that's something that we're working on, which is getting me out of my shell, to be vulnerable, to tell stories, to make an emotional connection, not just be an encyclopedia or
a robot.
RB,
a robot.
Chat RB3.
Yeah, a robot, right? And that's funny because this is a very true phrase, and that is the best salespeople tell the best stories. So salespeople sell stories. So obviously, you have your own way of selling. I'll have my own way of selling. You're obviously prolific at it with what you've been able to do. But to even enhance that, I think the more storytelling side, peeling back the layer of the onion. And as I said, I think on the last show, people will actually care about what you have to say now because you've actually accomplished something. So before, it was kind of, hey, me, like I'm legit, I'm smart, I'm capable. Please, see that, understand that. I think anyone who consumes a week's worth or just follows you maybe for a week content-wise understands that that's clearly there. Now it's the, hey, can I hit you on an emotional level? Also, I think many other entrepreneurs and maybe non-real estate people, this content will really land with them. Would you agree?
Well, you actually bring up a really interesting point that I had never really articulated for myself, which is that potentially the reason why my content, I think this is actually the answer. I think the reason why my content historically has skewed to the very analytical, to the very brass tacks, is because that was all I had to offer. I couldn't really talk from personal experience or talk about ups and downs of the business. All I could really talk about was the facts that I had learned for myself through studying and underwriting deals and being in the business for the limited time that I had been, right? So I could definitely wow people with what I knew, but I couldn't really wow people with what I've done.
Yeah, you knew every single concept in the book, every single piece of theory you could probably extract from your brain in an incredible way. But the other side, not that you didn't have it, but you're becoming more robust, you're developing, you're maturing. This is why people want to work with experienced people, because now you have 5 years of experience in the syndication world, in private equity and real estate. So that will continue to evolve as a person, as a friend. You're only going to change and mature and grow. So it's a really fun thing for me to watch. Obviously, I've seen this happen over the course of many years. So as a friend, I'm very proud of it, which is really fun to see. So, it's awesome. And, now you actually, when you have a couple $100 million of assets under management, people are going to listen a little bit more closely. As before, it's like, hey, well, just prove to me that you know what you're talking about. So it's awesome.
Yes, that's an interesting way to think about things. And I was kind of hiding behind knowledge, right? And it's like, well, don't look at me. Don't think about what I've got going on. Just listen to the knowledge.
Don't ask me about my age. Yeah,
don't ask me about my age, right? Don't ask me about my experience. Just look at the knowledge that I know.
Right.
And now we've gotten to the point, like you said, that we actually do have experience to speak on, and we do have a track record and experience, et cetera. Now I don't have to hide behind knowledge. I don't have to hide behind my age or anything like that. I can just confidently present myself to the world and say, here's the business that we run, here's what we offer, and we're very confident in it.
It's incredible. Awesome. Well, did you have any other thoughts while you're doing this? Because it's definitely a different exercise for you than what you normally do. Your typical day today is probably, crunching some numbers, maybe looking at a deck that we're about to pitch to other people. You're probably fielding a dozen random silly calls from me, of course, asking you a more, semi-basic question or something like that. You're not in the spreadsheet. What do days like today make you feel like? Or maybe Do you gain new perspective? Do you look at the world in maybe a slightly different light? What do days like today feel like for you?
I think they give me energy because it's a break in the normal pace, and so it just kind of is new and exciting, and also kind of makes me reflect on what we have going on, because Weston and the team are prompting me to talk about topics that I don't normally talk about or normally think about, talking about mentorship and success and how did you get to where you are, and different questions like that, right? Trying to pull nuggets out of me. And so it's not necessarily my favorite thing to do, or, I don't necessarily wake up thinking, oh, well, I want to talk about success, right? Or, it just feels a little bit cheesy to me, but I'm going with the flow, I'm buying in, and I'm taking a risk. One interesting thing that we talked about was, as an entrepreneur, you have to take risks. And we're not in it for the 15 IRR. We're in it for the 200 IRR, because as an entrepreneur, we invest our time and money to create big returns, right? We take big swings, we take big risks. I mean, for example, all the money we're spending on the video production, we're spending well over $50,000 to produce all these different videos. What if nobody sees them? What if nobody cares? What if they work against us? What if people watch the videos and they don't like us, right? So as entrepreneurs, we take risks, and that's an interesting concept, because we think about risk in real estate all the time, right? But then there's risk actually in life and in your business as well.
Do you feel like doing this, you're leaving your comfort zone?
Yeah, a little bit. At this point, I've been in front of a camera for hours and hours and hours. So
But
definitely more
different subject matter, right?
different subject matter. So that part pushes me out just a little bit. Yes.
Interesting. This is also just kind of another question. You might laugh at this, but do you feel like you're successful? The fact that you paused is crazy. I just want to make a point, because you're 26, you're a millionaire obviously already, not to brag, but just matter of fact. I don't think that's a secret to many people, but the fact that you had to wait and pause is maybe why you are one and why you are successful, but the fact that you had to wait and pause right there kind of says a lot to many people, in my opinion, and kind of tells a story in itself.
Yeah, I mean, I think it's just, it's my reaction, or my knee-jerk reaction, to be humble, right? So maybe I do think I'm successful, but do I think it's a good thing to rest on my laurels or to be really proud of my success? I don't know. It's a fine balance, because you definitely need to be proud of yourself. You need to have a reason to be working hard, but at the end of the day, I really am a very humble person, and I don't say I'm humble as in I'm such a good person, I'm so righteous for being humble, right? I think humility is actually a tool, right? I just use humility strategically, because what do I want in life? I want success, I want people to like me, I want what I want in life, and I've learned that in life, you get more of what you want when you're humble. So maybe deep down, maybe I'm not humble, maybe I'm a narcissist, who knows? But what I do know is that being humble is 100% a very valuable tool in life, and so I will continue to be humble, because it continues to get me what I want.
Interesting. Do you feel as if you couldn't say yes right away because you've met so many other big players and other successful people, or you look at, maybe another person in the business that is maybe further along than you, that's older, or what was the initial hesitation for you to answer, or is it just because it's like a silly question almost to you?
I think frankly, I don't compare myself to others. I compare myself to my future self. And so when I compare myself to my future self, okay, sure, I'm successful, but I'm not as successful as my future self. My future self has accomplished more, is further along, etc., right? So that's kind of my mentality.
Very cool. All right. Well, we started personal. We'll get back to personal. But for the real estate meat and potatoes here, what I want to speak on and ask you about is property management, the importance of it, and why we went to in-house property management about 2 years ago with the company that you and Kent founded, ran by the VP, Aaron Petrie, Radiance Living. So talk to us about the importance of it, why you founded it, and everything else that people need to know.
Yeah, so in-house property management versus third-party property management is a hot topic in our industry. we started our business with third-party management, just like everybody else. The vast majority of people start with third-party property management. And
Like us.
Like us. And the reason for that is because when you're starting out in this business, you potentially don't have all the expertise in property management. So it's much more reasonable to lean on an outside expert, right? And even lenders won't necessarily even give you a loan if you don't have a third-party property management company that satisfies their expertise requirements, right?
For how long is that for?
2 years, I would say. So
Interesting.
if you, for example, buy a deal, have a third-party manager, and then for 2 years you manage them, and then you go back to the lender and say, hey, I'd like to actually replace the third-party manager and manage the property myself, they'll probably approve it, especially if you're local. If you don't live within 2 hours of driving to the property, then that creates additional hurdles for you. But I think it's all overcomable. And so for us, we waited about, what was it, maybe 3 years. Yeah, we waited 3 years in our business to vertically integrate, which actually is very quick.
Yeah, and how many units did you have under management?
We only had about 650 at the time. So
don't most firms start after like 4,000 units or more, just like construction management?
yeah, you need more scale to be breaking even on your management, depending on where you are, because obviously if your average rents are 3,000 per unit, then you can break even a lot sooner than if your average rents are 600. But we were so committed to the path of vertically integrating that we didn't care that we would be losing money on management in the short term. So we vertically integrated very early on in the process, and also we knew that vertically integrating when we were smaller would be less of a headache because we had mentors and other people that we'd seen in the industry that vertically integrated once they had hit 5,000 or 10,000 units. And that transition is a nightmare. Transitioning all those units to in-house, there's going to be problems. So for us, it was a smooth and seamless transition to operating in-house because we had, number one, prepared for it for a couple of years, making sure that the infrastructure was in place as far as accounting, as far as property management software, personnel, all those things. And then also, we did it very thoughtfully, and we tried to keep continuity intact. So we weren't necessarily replacing everything and shifting everything around all at once. It was very smooth.
Interesting. So with that said, what prompted it to be earlier? Why did we start at, a sub 1,000 units to do that year 3 into the business, right? Like what, because I know the story, of course, but please let her know why property management was formed quicker for us than other people.
There's a couple reasons. I mean, one, the big kind of scarring story was the very first property acquired with the first management company. That was a nightmare situation where pretty much the day after taking over that property, that management company began stealing from the property. And
can you elaborate more specifically on how that was done and the interworkings of that, please? And do not spare a detail.
I don't think I can, frankly.
Okay.
So, yeah, I'm not sure what details are helpful to share, but there were just bad things going on that, unfortunately, it's bad enough for bad things to happen, but it's even worse.
That's a funny statement.
It's even worse when it takes time for you to even realize that there's a problem, right? And so when you have third-party management, there's a layer of bureaucracy between the property to the manager to you as the owner. And so bad news doesn't travel quite as fast as you would like. And even with vertically integrated management, you still have to train your team and emphasize to them that bad news needs to travel very fast, right? We talked about that last night as well. So because employees are sometimes scared to share bad news because they're worried about the repercussions or they're worried about the blame. And they need to know that there needs to be a culture that it's the opposite. We're not going to punish you. We're not going to kill the messenger. You need to share bad news so that we can all work towards a solution together. So in this situation, we obviously figured out what was going on pretty quickly, and we took action to remove the manager, fire them, deal with the lender, handle issues. It was a very, very stressful time, very difficult situation. And fortunately, we were able to turn everything around, make that a successful deal, but those scars and lessons remained. And from then on, we knew we were too small, but knew that we wanted to put ourselves on a path towards vertically integrating. So from there, from that situation, it was about 2 years or so before we finally vertically integrated. But for sure, we were working towards it that entire time.
That's awesome. Many people think, and I'm one of the biggest people that think this way, that it is a race to the bottom. So why is property management a race to the bottom in some aspects?
Well, I also want to go back and
Okay.
cover another point of a motivation for vertically integrating, and that
Okay.
is for investor relations and for being able to raise capital. Because investors, by and large, prefer to work with sponsors that are vertically integrated. That was feedback that we had gotten time and time again from savvy investors. And so we were taking their advice. Oh, well, you like to work with vertically integrated operators? Great, we'll vertically integrate. Right? So that, I believe, has helped us tremendously in raising capital. And
I
also,
agree, because I hear that all the time, and with whether it be a fund manager, capital raising partner, JV partner, retail partner, it's a very consistent theme.
yeah, at this point, I can't even imagine not being vertically integrated.
It would just be a chink in the armor and like a demerit almost, and something that'd just be like, oh well, they're just not complete yet.
Right, and it just doesn't feel like you're running a true business if you don't have all those things working and happening, right? If it's just kind of all outsourced, it just doesn't feel quite the same. Like it feels like you're running a real business when you've got over 50 employees and managing all these, the boots on the ground and the corporate team and vice presidents and regional managers and stuff like that. It's a people-intensive business, which makes it more real.
Right, right, right. And then also with aligned interests and whatnot. So how do we incentivize our property management team to report back to us? Do we give them some of our deal, our upside in the deal? How do we keep everyone motivated and happy and wanting to show up? Because property management, for many people that are listening to this and know the business, is kind of a thankless job. It's not. I don't want to disrespect the industry, but some people say it's more on the totem pole, a little bit lower than maybe some other things. So it's a noble thing to do. It's an incredibly important thing to do. But it seems as if the pay gap is a little bit there. So it seems as if there's just a lot of turnover of talent, and it's hey, I get the job, I do just enough to not get fired, but then they get on me, and then I'm there, and then I'm not, and then I kind of drop off, right? So how do we incentivize everyone and keep things moving and keep reporting as up to date as possible and current as possible?
Yeah, so like you're saying, property management is the most important aspect of the business, but it is the least appreciated.
Right.
Right? That makes things very tough. So we're sensitive to that fact, and we put a lot of energy into the management side. And you're talking about incentives and compensation. So our higher level corporate management team members are compensated with performance bonuses based on how the properties perform and things like that. Nothing too unique or anything like that. I mean, I feel like everybody should be doing that at some level. And otherwise, you're right. I mean, there's a lot of turnover, and it's hard to get the right people on the bus, right? And it's all about retaining that talent. So if you have to pay a little bit more, we've learned that is well worth it, right? You'd much rather pay somebody a little bit more to stay with you and keep them motivated and engaged than for them to leave and try to hire somebody new, train them, and things like that. So, yeah, retention is really important for anything, whether it be tenants or your team.
Awesome. So we have Aaron, and we have about how many other people that are on the team for regional directors?
5 people.
Okay, so we have 5 directors there. What is the unit count like per director and whatnot? When do you scale up? So is it like one person for 500 units, just for people kind of figuring out what that math looks like, right? Is it one person for 2 properties or whatnot? How does that kind of structure?
Yeah. So regional managers. So for people, the way that the multifamily property management business works is you have on-site teams. So let's take a 200 unit property, for example. So a 200 unit property is going to have an on-site staff, usually something like this: a property manager who works in the office and oversees everything, handles leasing, oversees the maintenance team, and oversees the accounting and things like that. So you've got your property manager, and then you'll have a leasing agent, and that's someone who handles, obviously, leasing. And then you got your maintenance team. For a 200-unit property, you might have probably around 2 people. One for every 100 units is kind of standard for maintenance. So you have a maintenance lead and a maintenance tech. And pretty simple 200-unit property, 4 employees, right? So that's your on-site staff. Now, some deals might need a little bit more. They might need,
with leasing agents as well.
Might need an extra leasing agent if there's more leasing happening with bigger turnover or something, or you might need an assistant property manager. However, staffing needs to work. So that's the on-site team. So now if you have 5 of these 200-unit properties, now you have 4 employees across 5 properties. So now you have 20 employees across the on-site teams, and that will be managed by one regional manager. So I would say a regional manager will manage somewhere between 600 to 1,500 units, depending on just how much of a headache they are and how spread out they are, right? It's always better to have properties that are closer together, which is why we focus in our particular markets of Dallas and Houston, and we have local teams in each market.
That's awesome. That's awesome. Do we third-party this out to anyone?
No, that's a good point. So our management company only manages properties for Lone Star, which keeps us very focused, and we don't spread ourselves thin. And to this day, even though the portfolio has scaled, we don't run the management company for profit. The management company still breaks even, if not loses money.
So how do you sell that to people? I mean, how does that make sense? Because most people are like, well, why would you do that then, right? So is it just the importance of having that in-house, or when does that point? How many units does it take, and when can you make it profitable?
Yeah, I mean, it's a very low margin business. It's a tough business. So I would never want to be in a situation where I had to try to squeeze a profit out of it. And frankly, and luckily, we don't have the need to do that, right? We don't need to make a profit on the management side because we make money on the private equity side, right? We make money through acquisition fees, asset management fees, promote. So that is where the real money is made when we perform, not in management fees, right? So with that being said, we could reduce headcount and optimize for profit on the management side.
But that's when you get to the race to the bottom. Yeah.
Right. That is basically being penny wise, pound foolish, right? Why would we try to squeeze profits and make a little bit money on the management to the detriment of the overall performance of the portfolio, where we could potentially alienate investors or underperform for investors, and then also make our promote less valuable, right? So we make less money when we sell property. So with that being said, like a third-party management company, like you said, it has a race to the bottom where they want to be just good enough so they don't get fired, but they don't necessarily need to knock it out of the park, right? So their incentive is to hire a regional, and instead of spreading that regional out for 800 units, they have that regional be responsible for 1,600 units, right? But we hire almost twice the amount of regionals for our portfolio size as compared to a third-party management company because, again, we're not looking to make a profit. So that's twice.
You want things to be smooth.
Right. That's twice the number of people that are focused on creating value at these properties than would be otherwise.
That's awesome. That's awesome. Okay. To anyone who wants to get their own property management team going, what would you recommend them to do?
I would recommend finding somebody who's already in the property management business that has the expertise that you can bring on the team, align interests with them, and then grow your management platform from there.
Cool. Do you have any other notes or comments about property management before we segue to the next topic?
No.
Cool. Okay. Now let's talk about something that I've probably heard you talk about dozens of times, and this is where things get fun, and I think this is when you kind of really get some energy going, and that is waterfalls. So talk to everyone about waterfalls in real estate syndication and in the private equity world, and the fees and everything else associated with that.
Okay, yeah. I mean, where do you want to start? I mean, waterfalls are
wherever you want to start. Yeah.
Waterfalls are the partnership structure by which the profits are split in a real estate partnership, right, or any private equity partnership. And so for us, our waterfall is pretty industry standard. We have an 8% compounding preferred return, which is subject to return of capital.
So does that mean everyone get 8% on their money when they invest with us?
Yeah, so I was actually just talking about that today with the video guys, because that's a big misconception of investors, right? They sign up for a deal that has an 8% preferred return and they think, oh, well, that means I'm going to get 8% cash-on-cash returns every month, right? And that's not the case. Preferred returns actually have no correlation to cash-on-cash returns. So that's a misconception that hopefully we can clear up a bit. But preferred return is no guarantee of return or anything like that. It just sets what the minimum return is that investors are owed before the sponsor can participate in any profits sharing.
Awesome. Okay, so what are the two? Because we have two share classes when someone invests with us, Class A and Class B. Do you want to get into that?
Why don't you share that?
Yeah, okay, well, great. So we have, for a minimum of $50,000 investment, it's an 8% preferred return, as Rob mentioned, cumulative and compounding, and then it's a 70-30 split to 15% on the IRR, and then 50-50 following the 15% return. That's for the Class A share, and the Class B share is a 9% preferred return, once again, cumulative and compounding, and then 70-30 throughout with no additional hurdle.
Perfect. That's exactly right. So basically, we're giving investors who are investing a larger amount a bulk discount, if you will. They're getting slightly better terms for investing larger dollars, and that's true in every business. And also, it scales up from there because, as you know, when we work with larger partners that are investing $5 million, $10 million, $15 million into a deal, then there's going to be, if not a joint venture agreement where they have different returns, different waterfall, and major decision rights and things like that if they're a majority investor, or if it's not a JV, then they have some sort of side letter that outlines that as well.
Very cool. And do people typically try to negotiate the waterfalls in your experiences, or their terms and whatnot with a side letter?
Most of the time, no, because if they're investing $50K, $100K, $200K, right, they know that they are a small investor relative to a big deal, and so negotiating a side letter is not that reasonable. Now, of course, people are welcome to ask for whatever they want and negotiate, but that's not something that we really do at those sizes. But for sure, for $500,000 and above, that's where things can start to get more interesting, so that we make sure that we're not alienating investors, because we know what market is for different check sizes, right? We know that for a $50K check, this is what people typically follow for a waterfall, and for a $10 million check, the waterfall is different. So we know what's out there in the market, and we, of course, never want to lose out on a relationship or an investor based on terms.
Yeah, and it's super interesting you say that, because we know what market is, and I think the more and more people I talk to, the more I say, oh yeah, that's standard, oh that's good, that's awesome. There is instances where there's not a preferred return in there, which is crazy. So basically the sponsor gets basically a split right away to start on cash flow and stuff, which is nuts. What are some of the red flags that you've seen people have when there's not a waterfall, setup in there?
Yeah, I mean, like you said, not having a preferred return is totally insane. If you're doing a multifamily value add deal and there's not a preferred return, that is not a deal I would invest in. So that would be one way to screen out potential deals. If you're talking about your guy asking the 40 questions to sponsors, I would, just want to see what that waterfall looks like for sure. But yeah, that's a red flag. Another red flag I would say is having a promote that's greater than 30% in the first hurdle, or after the first hurdle, because just anything more than that, from what I understand, is not really market.
What if they have a higher preferred return, but then a 10 preferred return, but a 40-60 throughout? Is that economically viable, or is that common? Because I've seen a couple of people pitch that before.
A 40 promote over a 10 pref.
A 10-40, yeah.
Yeah, it's interesting. I mean, I would have to run the numbers, but that seems actually okay. I mean, that's probably, if the deal goes well, you're better off doing the 8 pref with a 30% promote over that. But if the deal does okay, then you're better off taking the higher pref.
Yeah, if the deal's a 12, IRR, then take the
40%.
Take the 1 point or whatever. Basically, is what it is. Yeah, it's not an issue, and that's still a good deal.
Yeah, so it's kind of just this general idea that as the deal does better, you're better off sharing less of the upside with the sponsor and taking a lower pref. If the deal is more mediocre, then you're better with a higher pref to protect you against the downside so that you get more of the profit.
Right. Interesting. Well, do you have any other notes or comments about waterfalls and maybe where you learned that from initially, or is this very common in the private equity world?
Yeah, I don't really know where I learned. I mean, also we just barely scratched the surface, which I don't know. Maybe I'm just running on fumes right now, and I don't feel like going through all the more nuanced elements of a waterfall. But yeah, I don't know where I learned it all. Just talking with different investors, getting different term sheets, and seeing different structures and things like that has familiarized us with waterfalls and what's out there. The other thing, just going back to our comment about kind of that sliding scale between higher pref, lower pref, and things like that, that's also where a higher tier hurdle comes into play. Like you mentioned, for our Class A investors, we have a 50-50% split of anything above a 15% IRR, right? So splitting the profit 50-50 with the investors and the sponsor that sounds expensive, but that's after investors have earned a 15% IRR, right? So that's what justifies that 50-50 split, is that, okay, they've already done well, so now, and we've done well for them, so now we're going to get more disproportionately compensated for that, right? But to say, oh, let's go 50-50 on cash flow after a 8 pref, that doesn't really make sense.
Right. Very cool. Awesome. Well, I'm sure at some point we'll dive back into that concept. I know you've had a long day. I was calling for a couple hours straight before this, so we might be a little bit brain drained in this topic. So we'll circle back maybe later if need be, and maybe we'll add a little bonus nugget to another concept and topic in the future if there's some sort of correlation there. What I want to also talk about right now is on the personal side, as I said, to start with, we'll go back to this, and that is picking friendships. So I think one topic that we talk about all the time, obviously, as we've said, we met and developed a relationship, and then the business side came into play. But picking and developing friendships, I think you and I look for very similar things in people. I think similar to you, I have friends that are pretty much younger than me, and then also friends that are a lot older than me, and I think you're very much like that. And I think as I've gotten older and kind of more in this community now, it's like I'm A-okay with being friends with someone who might be 50 years old and someone that might be 20 years old, which is a very large gap if I feel as if they're giving me good energy and are a positive force in my life. So as you've gotten older, talk about how you choose and seek out friendships and relationships, and what that looks like for you now, and maybe how that's evolved.
Yeah, it's tricky. I think just by and large, as you get older, it's harder to make friends, right? When you're young, it's much easier to relate. It's like, oh, well, you like basketball? I like basketball. Okay, we're friends now.
We're on the team. Yeah,
we're on the
AAU
team together.
team.
Yeah, exactly. So, and just, you get more busy. It's just harder. It's just harder to make friends as you get older. So that is something that is working against all of us in general. And then, more specifically in our case, because we are aiming to work hard and to become more successful, the air gets thinner there, right? There's fewer and fewer people that we genuinely want to network with and be friends with that are aspiring to operate at that level, right? So it just gets harder and harder to find like-minded people as you push yourself further and further up your own path of success, whatever that looks like for you, right? It doesn't matter whether you want to be the best person in the ballet or whatever, or if it's the best person in multifamily. The room gets smaller and smaller as you get closer to the best and best of whatever it is that you're trying to do.
Yeah, and it's interesting because sometimes people just drop off. There's mental health things. There's just, for whatever reason, people's interests change from one way or another. Or, I think we talked about this, which is just when you're starting work, society beats people up. You know what I mean? And it's tough, especially the first couple of years out of college. Everyone's trying to find their own path and make their own way, and kind of recalibrate what happiness means to them. Because happiness when you're 18 to 22 might be, okay, how can I buy some cheap beer, or go to some party, or hang out with girls, Now it's like, okay, well, maybe you want to, still maybe have a couple cocktails and, hang out with a couple of nice gals, of course. It's a very normal thing, but it's like, okay, well, are you making money as well? Do you have ambition? Are you bringing something else to the table? So have you experienced anything like that before on your end? Because I know I'm a little bit different than you. You're kind of cut from a different cloth in many respects. I think we're incredibly similar, but there's a big contrast between us as well, which is a very nice coupling together, right? So you left college, I had the Greek life, the college background and stuff, and you went to a very, very well-established, private, university where it was probably more academia than the extracurriculars like I experienced at U of A, Carnegie Mellon compared to the University of Arizona. I probably couldn't think of two places that are more not only geographically spread out, but probably campus and overall experience-wise different, right?
Very different. I didn't go to a single college party.
Yeah.
At Carnegie Mellon. I obviously went to other college parties at U of A, for example, right? And that's certainly worthwhile. But that's very different experiences. But in either case, in both of our cases, we made sacrifices, and that's just the reality of the game. You have to make sacrifices, and we all have our own paths, and certainly I'm jealous of you that you got to have this super fun college experience. And when I have kids, I definitely will push them not to go to Harvard, but to go to a fun college.
If they go to college.
If they even go to college at all, honestly.
Because I think college, and that's just another tangent, and this gets me giddy, but it's like, will college even be necessary? Because back in the day, you just needed a high school degree, and then it's like, okay, everyone needs a college degree.
And now everyone needs a master's.
Well,
it's like going back.
At what point, it's like, no. You figure out a skill or a trait, or, I think in hindsight, if I knew what I knew now, I would have been like, okay, maybe I'll get my GED and I'll work for a mortgage company, a Rocket Mortgage, or some sort of sales, do real estate, do wholesaling, and you can make some pretty good bread and figure out the process and learn, trial by fire, right?
Totally. So, yeah, I would tell my kids only go to college if you want to, or if you need the education for some sort of specialized career, right?
Yeah, like
obviously,
doctor,
lawyer,
STEM, yeah.
Doctor, lawyer, right? Those types of things where education is unavoidable.
Or engineering, right? Yeah.
So, otherwise, and even then, I get it. If you want to go down that career path, you probably need to go to a target school, go to a really good school, so that way it helps with recruiting and you can get on a good career path and stuff like that. But man, life is too short to do all that. It's just crazy. I would just push them instead to go have fun, study, travel, learn what you need to learn. That's a tricky subject because it's hard to make those decisions when you're so young. You're asked at 18, 19 to make...
Figure out what you want to do the rest of your life.
Exactly.
Yeah, it's absurd. That's funny. And it's funny. People change. As I said, people drop off. Interests change. People go through just their mental stuff. Like, I think that's mental health. Do you remember people talking about, and always saying mental health back in the day? And I'm not saying that's a bad thing. It's amazing that this is even in the thought process of people. But I don't necessarily call that being as much of a hot or thought about word back in the day.
Well, nowadays you have like Mental Health Wednesday and Let's Not Work Tuesday.
I think it's a little silly, yes, but
there
are
some
some
break Thursday.
Yeah,
don't show up to work Friday. You had a long weekend, skip work Monday.
Yeah, well, the booze flu for some people. Yeah,
it's ridiculous.
Yeah.
So, I love being a little bit of a contrarian, and so meanwhile everyone's doing the remote thing. We're in the office 5 days a week.
Well,
you're doing the remote thing.
Yeah, exactly. But that's separate. Yes.
That's a separate issue.
Yeah.
But
for the most part, yes.
But yeah, no, that's what our company's about. That's what I'm about. And I don't know. I mean, I feel like our office is across the street from Goldman Sachs in New York. And I look into their windows and they're not there at 8 p.m. This lore about Goldman and investment banking and these guys are working till 1 a.m. and stuff like that. Yeah, maybe there's analysts in their first couple years that are working super hard and staying until midnight. Fine. But I look on Friday at 5 o'clock, they're all gone.
Interesting.
So I feel like the work culture across all sectors has really changed, and which is great for us because it gives us a more competitive advantage, right? Those that are still interested in working hard, being killers, here's our opportunity.
Yeah. Yeah. And I think we've talked about this, but for us, staying lean will be something really cool to do as opposed to hire, hire, hire. It's like, you have a couple killers that will do the room of what 10 could do, right?
Yep.
Yeah.
And with technology, automation, AI,
Systems.
that's only going to become more and more true.
Yeah, and I just, it's funny, and I can relate to this firsthand, especially today. I just use a software, and this is totally a tangent from what we were
No,
on
it's
with
helpful for
relationships.
people to hear this.
Yeah, but I use a tool. I'm not going to say what it is because it's our secret. If you want the secret, you have to reach out to me and invest with us or raise money for us. But I used a tool today that would have taken me a week's worth of work. I can consolidate that and compress that into probably 8 hours. So think about the efficiencies there and what that can do. One person now through a great software a software essentially can automate that much work and basically do things in mass. That's incredible. So what one salesperson could do is what 3 people could do probably back in the day almost, just from time. And if you had to manually dial every number, it's crazy.
Right. So instead of having a larger average staff, you can have a leaner, amazing team, and then enhance their output through, like you said, software, automation, artificial intelligence will continue to make that more and more possible.
Yeah, and we're gonna, continue to implement these tools. We're using a new outreach tool, which I don't want to any user names because it's our information, but we're going to use a new outreach tool, the tool I just used today, and then we're going to have social media, which creates your own echo chamber into all these other platforms. So you can get your message out in really cool ways now. I mean, these aren't necessarily new, but to implement and to kind of integrate with automation and AI will be really powerful for us to stay lean and to keep us busy and to have a tighter and smaller firm as opposed to a body shop.
Totally agree. It's 4:00 now. Do we have any last thoughts? Or
Well, I just think I had some notes here. People change, people drop off, people get married. It's funny. My best friends have changed over the years. So now it's you and Teddy and a couple other folks that I'm really close with. I think phone time, I speak to you, and there's a couple other people, but Trevor Lovelace and some other really good friends, Aaron Kosh and whatnot. Those are probably the people I speak with, on the phone the most. But it seems as if your friends shift to people you do business with and other people that are probably uber successful in their field, just because time's limited, relationships are limited. You don't have the opportunity to hang out with everyone. But it's funny. I can think about all my friends that I was close with in life. Childhood friends. Like I went to different high school and then I kind of dropped off. My high school best friend kind of later into one of my college best friends. He, all of a sudden, I didn't hear from him for 6 months. He met the love of his life. He's married. He has a kid now. Could not be happier for him. Another really good friend of mine from college. Now he is crushing it. He got in really early with a gaming company from one of my other buddies. 1047 Games, shout out. He's living in LA. He lives with a girlfriend. He'll probably get married to her. So things just kind of ebb and flow and change, and people go in different directions, and that's just kind of part of life. So people that are younger or older, if you're older, you've definitely seen this pattern in a movie before. If you're younger, just embrace the fact that some people you meet that are kind of there in that season of your life, and that will likely evolve and change.
And just because you grow apart doesn't mean that
you don't have commonalities, or it's not, and nothing personal. Maybe
it's nothing personal.
Yeah.
It doesn't necessarily mean that you don't like that person or that all the time that you spent with that person was a waste of time or something like that. It's just like you said, it's the seasons of life, and that relationship had its purpose, and that purpose might change over time.
Yeah, and to your point, it's not necessarily personal. It's just things happen. People go in different ways, and that's the ebbs and flows of life. Cool. Well, with that, we're going to wrap up. If you have any questions about Lone Star Capital, if you're looking to make any sort of real estate investment, if you have a 1031 exchange, if you're looking to place capital or learn more about us, please reach out to me. Thank you so much for listening or watching, and we hope to see you on the next one.